Good morning. This is the video newsletter for Buy Sell Short for Sunday, June 5th. We're starting off with the Dow 15-minute chart, and you can see over the last couple of days, pretty steep decline. We're down 400 plus points from the highs earlier in the week. We are stuck in this bullish falling wedge. You can see resistance right now is at the 50-day in this time frame at 12,213, and the bottom possibly at 12K. Let's look at the daily chart though. Right now we're actually, hang on. Here is the daily chart, and you can see the steep sell-off when we actually broke down through the lower support of this bullish falling wedge on the daily chart on Friday. And, you know, the fears that prompted us to go high cash a couple of weeks ago, a scenario similar to what we saw back in March, it appears to be absolutely what we are looking at right now. Just really ugly market. Continue to be high cash. 80 to 95% is our desired cash stance at this moment in time. Any new plays, we're looking to play half positions only and trying to keep as few overnight positions as we can. This is more of an in and out intraday scalping market, at least right now. And that's a large reason why there have been very few email alerts over the last few days. You know, by the time we send out an email alert in some of these plays, the bounce and the quick gain has already been garnered. And, you know, I just don't want people sitting in a lot of plays right now. So, you know, we're just going to sit back, relax. That is the beauty of being high cash. You're stress free. You're able to sit back, monitor the market, monitor plays, and enter the best risk reward ones. And even if you're not trading this market, definitely watch stocks. I mean, look at these chart setups we're doing in the Popper Scan or in the nightly videos. You know, you don't have to trade to learn. Crappy markets like that, like the one we are in right now, are great for picking up some good trading skills that are very beneficial whenever the good times come. And the good times will come. Here is the 1 year chart on the Dow going back to last summer, and you can see on Friday we broke that uptrend line. We also broke it back in that March tank and then recovered nicely, but you can see going back to the July lows at 9,600 last year, that uptrend line that's been in place for almost a year now, we broke that on Friday. We've got a magnet right here at the 200-day moving average. That is at 11,639. And to give us a point of reference, back in May of last year when we had that first European crisis, flash crash, BS sell-off, the market went from 11,250 all the way down to 9,600. So we essentially had a 1,600 point correction over the course of about 6 to 7 weeks. If we had a similar correction on the Dow from our previous highs, we'd be looking at a retrace back to that 11,200 area. And coincidentally enough, if we went back to that 11,200 area, that would be the high of last May's market. So, you know, we have some possible downside risk here, especially with QE2 ending. Now, on that same note, this market has a awful habit, well, not awful, awful if you're short and a bear, of sucking everyone in on one side, on the bearish side, and then just jamming back higher. So we have to keep that in mind. That's the reason I want to just trade intraday, at least for right now. Russell 2K, we're looking at the 1 year chart here on the Russell, and we've got a possible head and shoulders formation on the Russell 2K. 800 break, and we'd be looking at another 5% downside to that 200-day moving average, and that is going to be the theme across all these indice charts. Here is the SMH, and if you're looking at the SMH here, we broke down through that support, and let me pull up the 1 year chart here on the SMH. Here we have the 1 year chart in the SMH, and look, support 32, 200-day moving average. So this could be our target for, you know, essentially the market over the next couple of weeks if we don't see some sort of meaningful bounce early this week. As for some stock plays, you know, we've got some active plays going in right now. The biotech stocks were hot on Friday. ASCO began this weekend. We had a very nice winner on AGEN. This is one we talked about in the video all last week, and we picked up 95 cents in the chat room during the market sell-off on Friday and traded as high as $1.12. Nice fat intraday move. Gave it back in the close, but we had a repeat sell-off in the market, so not really a surprise. And again, big moves up and down are common for this biotech stock. These guys present for 4 hours, I believe, tomorrow morning, and they're holding an investor conference call afterwards. So one could logically assume that they're going to be releasing good news tomorrow. Targets 112, 115, 120 plus would be our targets on this one. 95-cent stops. NEI, just when you think this one's going to run, it annoys you, dips, then it runs again. Continues to hold that $1.10 support. Breakout is 121, and the way this stock has been coiling, a break of 121, I'll be looking to add to my position on this one, with the target still being that 20-day exponential 136. If you want to be a little bit more cautious, you can place your stops at 108. I'd prefer to place them at $1.05, but 108, is a place you can place your stops here. And also check it out. We're looking at a possible MACD cross this week, so definitely one to keep an eye on. And on a positive note, it looks like unbalanced volume has sort of bottomed out here. And over the last few days, each and every pop on NEI has come right after we've seen a 200K plus bidder show up on the stock, pushes it to its day high. He disappears right on the close, and they paint the stock down. I tend to think that is an accumulation sign. The guy looks to push it up, picks up shares, pulls the support, and then, picks up some shares late in the close. So definitely we're keeping a very strong watch on this one this week. We've got a gamer conference this week. I believe it starts on Tuesday. COOL, our gamer stock. We also have the Zynga IPO hype to hit. Continues to try to break out, but the market has just been not cooperating right now. 334 is the breakout here. If you wanted to enter a scalp, 328 break would be the entry. That's the 50-day moving average, which continues to move higher here. So we will continue to monitor this one for some ATM trades that it's been giving off lately. Quick mention on our other gamer, MCZ. Volume has really died off here. Again, another play on the gamer stock. These guys have a lot of product at this week's show. We also have earnings coming up in the next week, which probably is what we need to break out here. Essentially, at this stage, breakout add is $1.90. It breaks $1.90, we're back into our uptrend again. So that's the level I will be looking to pick up a large position. Going into earnings, just like back to our usual earnings play, half position or less into earnings on this one. Small position, just given the market we're in. And that's pretty much it on this one. PURE, you've been reading a lot of stuff about the E. coli in Germany. We saw some of the other clean food plays really take off on Friday. These guys are a player in the field. 120 is breakout. We've got a nice uptrend channel in RSI. Had a huge spike on volume back there in mid-May, so this stock can move on volume. And, we've got support at $1.05 here, and the indicators are a go. All we need is volume and a break of 120, and we really could see this one do what WEST did for us last week. Essentially go kaboom and go on a huge run. PURE has the same potential, in my opinion. So it's just a matter of how much that E. coli hype hits the media over the next couple of days. Last but not least, quick mention on ALXA. Rule of 2 play, like I mentioned in the chat room, a break of 2, and, we could see that gap fill up at 240 over the next several weeks. I would be watching this one for a possible add, just like we did on Sirius and LVLT, up there in the 188, 190 area, and then adding to our position on a break of 2. So this one, on strong watch for a possible rule of 2 play this week. So that's it for the video. Not a whole lot of plays, given the market environment we're in, but we're getting some very nice moves and trades in the chat room. Small gains is all we're looking for in this market. We're just looking to keep our head above water and waiting for the happy time to come, which will be soon. Crappy periods like this are always followed by great periods. And look, if you guys have been with us since last year, look what the market did last May and June. Exact same thing, and then just a monster rally July and August. And that's been pretty much par for the course over the last couple of years, and no reason to think we're not going to see the same again. I mean, even with the Fed QE2 ending, we've got interest rates at record lows. The unemployment report is not going to get rid of the Fed. It's probably going to prompt the Fed to hang around a little bit longer, and you'll probably start to see the QE3 chatter really start to pick up just like we did last year, and that's another support area for the market. So that's it for the video. I will see you guys in the chat room tomorrow. Good night.